All right. We out here. What's up, everybody? Welcome to the morning show. Today, I am one of those cool podcasters. You know how all the cool podcasters these days, like they hold the microphone closer to their mouth. Maybe it's because the sound picks up good. I don't know. But today, I'm going to be that cool podcaster holding the mic really close to my face, or not that close. I'm not really sure how close to hold it, but you'll tell me. Anyway, welcome to the show. Got to go in for you today. We got Dave Nicoski on Vermilion Research. He'll be on at 9. We'll have Alfonso on, as we do every Friday. No Louie. If you missed Louie, tune into yesterday's show. We had a bit of a crypto Thursday yesterday. Let's see. I have a stock I want to talk about. It's Sarepta Therapeutics is making a big move today. I've been following the story for literally 9 years. Okay, so very interesting. Very, very good news for them today. We'll talk about that. It is an OpEx. Be mindful of that. And that's what I got. So what up, chat? I see you. And let's roll, I guess.
All right, everybody. Spencer Israel in Baltimore, right? You're in Baltimore?
That's correct.
I like Baltimore. Baltimore gets a bad rap. We're like, Baltimore sucks. Well, a lot of places in Baltimore, one can argue, sucks. But the parts of Baltimore that don't suck are awesome, right? Can we agree with that? Like, think about all the parts of Baltimore that you might not want to go to. Fine. But the parts that are really nice, like Felts Point, is really nice, right?
Yeah, I guess I could make. They're saying it's too dark, but where I am, I guess I can make it lighter. I'm sitting right in front of a window. I thought it'd be bright enough. I guess the background's too dark.
What are you doing in Baltimore? Just visiting friends and family?
My sister-in-law lives here, and so we're here for her birthday. You know what we're gonna do tomorrow? We're going to medieval times.
Stop it! Does that still exist?
I have not been since I was maybe 10 years old. So it's gonna be a fun one.
Medieval times. I went with my college buddies, like I don't know, 15 years ago or
right.
more, probably.
Yeah, because it was big in the early 2000s.
Yeah, that sounds right. The Charleston. Shout out to the Charleston in Baltimore. Excellent restaurant. The chef is like a super famous chef, and it's kind of like a southern kind of twist to Baltimore cuisine, I suppose. Excellent. Okay. Shout out to the Charleston.
And right? for all the Wire references in chat, yesterday on the way in, I was pointing out, hey, that's what McNulty was. Hey, the Wire. And so I'll do my best to go on a unofficial Wire tour this week. We have Steve here, by the way. His camera's not working just yet, but when he gets his camera working, we'll bring Strazza on. But there we go. Is his camera? Are we good, Steve? Thumbs up. Give me a thumbs up or something. Okay.
Yeah. All right. Good. Hey guys.
Up, Steve. Why don't we hit the state of the markets there, Spencer?
Yeah. All right. We have some states to discuss and some markets.
All right, we've got the Dow futures not doing much, down 60 points this morning, not really budging much. S&P futures down a little tiny bit, 55.37 for the S&P 500. NASDAQ 100 holding that 20,000 level for NASDAQ futures, not doing much this morning at all. So in the equities market, somewhat muted. Bonds up a little bit, 0.25% for 30-year bond futures, hanging in there above 120. Crude oil flat, holding in there above 81 for crude oil futures. Copper futures down 2% at $4.46. You've got gold up 0.33%, 23.77. Silver down 1.5%, but still holding above 30. With volatility back above 13.5, creeping higher. And over in the old funny money, Bitcoin down again, another 1,000 points to the downside for Bitcoin, down 1,200 points, almost 2% to the downside. 63,600 for Bitcoin. Quite the fall from grace there, but when it was above 70,000 for a hot second. Ethereum under 3,500, down another percent on the day. Solana 131, down 2% on the day, and Binance cannot stay above 600. Talk about a disappointment, that Binance. 583, down again today. Total crypto market cap, Spencer Israel, keeps inching lower, down to 2.27 trillion. Bitcoin dominance hanging in there above 55%, by the way. Any thoughts on this morning, on Friday morning's futures action?
I like that today is the Spencer After Dark morning show edition.
Yeah, Spencer.
I can turn the light on, but I thought it was bright enough on my face that you didn't need. I don't know.
Spencer would make a great serial killer. You know, like if you wanted to,
he is right now, like wherever you are, you'd be a good.
Whatever this is going on right now, like I don't want to know what kids or women you're like hiding in the closet.
I'll tell you
that their families are looking for them.
I'm in a Baltimore row house, which if you've seen The Wire, you know what I'm talking about. So that's where I am.
Everything okay in your life?
Everything is great.
Yeah.
Good.
I sometimes I wonder about you, Spencer. Sometimes, look, even the chat's thinking Spencer's doing some serial killing.
From your serial killer shack, did you have time to check out the Sarepta news?
Why don't you tell us what's got you so excited about this?
All right, so first thing I saw obviously was that the stock is up like 35% today. But this story with Sarepta and this disease, they've been working on this drug for Duchenne muscular dystrophy, DMD, basically forever. Yes, Steve. So I was telling Alfonso, I was like, if you bring up like a 10-year chart of Sarepta, you can see the story of this drug on the chart because it has been that long. So the news today is that their drug for this that treats this disease was approved by the FDA for every child, everybody, right? Anybody that has this disease. This is new because prior to today, the drug was only approved for people under 4 years old and under, and they thought maybe it'll get approval for kids over the age of 4 who can't walk. But nope, it got wide approval today, as wide approval as it's going to get. I remember talking about this drug and this disease in 2016. This thing first got approval, I think, in 2016 to treat, like I said, kids ages 4 and under.
So what happened? Because I thought this story that you're talking about now happened like 6 or 7 years ago. Now I'm looking at the chart, and we've been ranging since 2018.
What happened with the drug? Well, they did more trials, and now they got wider approval. Apparently, this was a very close call at the FDA, is what I was reading. But regardless, approval is approval. So, yeah, this is a very rare disease, right? It doesn't affect that many kids, but it's a terrible disease, and there is no other drug in the market that is approved right now to treat it. There was another one in the pipeline from Pfizer, and that failed in late stage testing, right? And then there are some other drugs that are earlier in the testing process that aren't there yet. But so this is the only drug that is out there to treat this disease.
So throw up the chart I just threw in, because this has been, we talk about how it's been sideways since 2018 for Sarepta. You could zoom out 25 years ago. We're in the same spot we were then. So this has been a long road, because I think they're a single drug biotech, right? Like this is their.
They do have another program. They do have, if you like how I call it programs. They do have another program, but they are a gene editing company. That's what they do. Like gene therapy, gene editing, and this is their baby right here, right? So, yeah,
this is what Micron looked like last year. Pull up the chart.
I mean, yeah, they're not related in any way,
are they on? Biotech? Tech?
Wait, JC, were you talking? I missed you.
Yeah, this is officially an all-time high, right?
Pre-market.
Yeah.
166. So that would put it not quite at an all-time high. It's basically at the December highs of 2020. Actually, it's still below it. No, this wouldn't be an all-time high at all. It still has another, 15 points or so to get to a new all-time high. So it still has room to run. Still has work to do.
Remarkable.
What else stands out from the futures? We're getting Peter wants us to short Bitcoin. No thanks. You are welcome to, Peter. I will not be shorting Bitcoin. Bitcoin can go to zero. I won't be short. It's not something that I'm looking to short.
And we
Crude oil can go to zero. I'm not going to short crude oil.
We talk about like this dynamic. Stocks like Supermicro and Nvidia are the most popular short ideas. Bitcoin. There's a reason for that. There's FOMO, and then there's revenge trading in the opposite direction, which is what FOMO sucks, but we all deal with it, right? But then letting your brain convince you that you want to take the other side and try to like hero trade something because you missed it, that's revenge trading. And that's some real sick shit. But that's what that is.
Yeah, I mean, you're welcome to buy MicroStrategy puts if you want. You could short the leader in that group if you want, but that's not really what we're going to do. I'm certainly not going to be shorting a leader in the space. It could go lower, but that's just not it's not an optimal strategy to be shorting strength, to be shorting leadership. Like that's not how I like to roll.
It's a good way to learn an important lesson.
Yeah, maybe. Listen, Peter, if you want to short it, knock yourself out. It doesn't matter to me what you do. I personally am not going to do any such things. I do not short crude oil. I don't short Bitcoin. Maybe I should. I probably would have made money through that in the past, but man, I don't think I'd be able to sleep at night if I'm short either one of those.
Wait, do you mean you don't short those assets in any kind, or you wouldn't, or you wouldn't
this
short?
This is not something
I
like to do. Like I'm not trying to short Bitcoin.
No, but I mean, like, you wouldn't short an energy stock.
I would short an energy stock. I couldn't tell you the last time I was short an energy stock. It's just not something that I like to do. I like to sleep at night and knowing that I am short something that can, if God forbid something explodes in Sudan or whatever, right. You know what I mean? I'm dead. Like I'm not trying to do that.
A lot of money managers, equity managers don't even dabble with energy anymore because first of all, it's such a small allocation to the overall market. They really don't need to like meet any benchmark. And then the reason why is that they're not trying to make a bet, a directional bet on commodities prices. That's what energy comes down to a lot of times. Like you said, JC, something happens.
Look at Spencer. Look at the Spencer with a row house in Baltimore.
I got a light, guys.
Bill, you can short Bitcoin. You can short Bitcoin on the exchanges especially institutions that have better connections than retail investors. You can short it if you wanted to.
Plenty of vehicles to short Bitcoin. However, we can't trade options on the spot ETFs.
We can't trade options on the spot because the options market aficionados or whatever are communists, and they haven't approved the options markets yet. I don't know what the hell their problem is. Like, get your shit together, guys. Let's go. These damn ETFs have been trading for how long now? Couple months.
To do it.
Couple of months. Come on. And you can trade. There are derivatives markets already. They're just not that liquid. All right, let's get into the TradFi. I got a couple of charts that I think are worth noting here that are still very symbolic of what we're seeing in the marketplace this year. Throw up slide 2, Spencer, please. So here we're looking at high beta versus low volatility all year in a sideways range, right? Not much action there at all. So this is a ratio that in strong markets trade higher with the overall market. When you look at the median stock is down this year. Quite a bit, in fact. I shouldn't say quite a bit, a few percentage points for the value line index. But, not every stock looks like NVIDIA. Not many at all. It doesn't mean that there are not opportunities from the long side. In fact, we've been finding more and more opportunities from the long side than we probably the most amount of opportunities since last October, I would argue. But a breakout here in high beta versus low volatility, I think could really go a long way. So that's one to watch. How about discretionaries versus staples, Spencer, in the next chart? So here we're looking at, on top, we're looking at the equally weighted discretionary versus staples sideways all year, and the market cap discretionary versus staples down all year. So if we're going to get some rotation into consumer staples, I think that would be a tremendous opportunity. And there are stocks setting up. Amazon pushing up against new all-time highs. Tesla is a name with a very well-defined risk that is on our radar as well. Those are the largest two holdings in consumer discretionary. Look at Home Depot. Home Depot already coming off those lows, making new multi-month highs here. 2-month highs this week for Home Depot. I think Home Depot is the third largest component of consumer discretionary. Do I have that right, Strazza? Home Depot is, yes, officially the third largest component, representing over 9% of the consumer discretionary index. The big three, Amazon, Tesla, Home Depot. After that, it's McDonald's and Booking Holdings, far for fifth. Not really big weightings there. The bigger weightings are definitely Amazon, Tesla, and Home Depot. So consumer discretionary, see if we get rotation. How about small caps? Look at slide 4. How about small caps doing nothing all year? So when you look at large caps doing well, particularly large cap growth, and a lot of areas in the market are just not behaving that way. So I highlighted these range bound markets that we've been in all year. Your resolutions higher, I think, would be really constructive for this overall market. And when it comes to small caps, on the small, you got the Russell 2000 up top, S&P 600 down below. S&P 600 companies need to actually earn money to be on that list. Russell 2000, anyone's allowed in, no discrimination at all.
But really, what's the difference? Doesn't matter. Does that even matter? Look at the chart. That's why I left.
Yeah, what's the difference? Not much. It's more of an asset allocation strategy. As you can see, investors don't give a shit whether the companies make money or not. So for you guys obsessed with your fundamentals, you're welcome to do so, but the market is literally telling you that they don't give a damn about your fundamentals. Small caps are small caps, bro. Right? Russell 2000, anyone's in, whether you earn money or you lose a fortune, you're in. S&P 600 down below, you need to have a track record of earning money to get in there. And as you can see, they move together. So to Spencer's point, the market doesn't care at all about your fundamentals. And finally, let's zoom out here on the Russell 2000. Look at the next slide. As a reminder, folks, the small cap indexes are in long-term uptrends. Look at this series of higher lows and higher highs. Go back to the last chart, Spencer. You see, so while we've been sideways all year, and small caps are making new 23-year lows relative to the S&P 500. So in other words, Russell 2000, 23-year lows relative to the S&P 500, and they've gone nowhere all year. Go to the next chart. When you zoom out, this thing's in a long-term uptrend. So despite all of this sideways, messy action this year, well-deserved correction for markets, in my opinion, there are opportunities. And I want to point out, just going to throw one out there, LPL, go to the next one, Spencer. Just, new all-time highs here. There are stocks that are breaking out, completing bases across different kinds of sectors. It's not like one area is now being rotated into, you can argue maybe discretionaries or that, but you're finding opportunities across different sectors. So I just wanted to throw that out there. Small cap industrials, I'm with you. Front and center for sure. Here, let's throw it up. Throw up the new slide 7 here, Spencer. So this is the small cap industrials, which have been the leaders in that space most definitely. Phil was pointing that out there. Yep. This has been the strongest space, right? Strazza, are these the strongest in the small caps?
Yes. Materials also.
A lot of these materials names, they just don't have large cap companies that are that big, because material stocks are just smaller. They're not going to be $3 trillion, right?
Yeah.
But this is a big one. Industrials, largest weighting in the small cap 600. See if that's still the case. For the small cap 600, the largest weighting is industrial, 17%.
Yeah.
Financial, 16%. Technology, 14%. Discretionary, 15%. Healthcare, 10%.
So the largest weighting is the leader, and still it looks like crap.
Look like
I mean,
crap.
I wouldn't say it looks like crap. This looks pretty good. Higher lows, higher highs is a leader. Oh, you're saying small caps in general?
Yeah, that's what
Well,
I mean.
think about it. A quarter of the entire index for the Russell 2000, let's just say, is biotechs and regional banks.
Yeah, okay.
You know what I'm saying?
Yeah.
So you got a lot of components in there. If you look at the IWM, the IWM is the Russell 2000 index. In this case, technology is the largest component, but you got 15% healthcare, 15% financial services. So that's a third. That's a third almost are regional banks and biotechs, and a lot of names. A lot of names. So if regional banks could get going, maybe that's an interest rate story. I'm looking at regional banks too, man. Regional banks hanging in there. Had every opportunity to collapse and really break down. Look at the regional bank index. You're not impressed by that, Strazza?
Oh, I'm involved again. We'll see how it goes this time. Yeah, I think these things are ripe right here against the lower bounds of these ranges.
Here, throw up slide 2, Spencer. You could see exactly what I'm looking at. So this is a big component of the small cap index, but hanging in there pretty damn good, right? Had every opportunity in the world to sell off. Momentum has been in a bullish regime this entire time, right?
So here, the real question for me is: do you just add more exposure to the big ones that have been working? Do you buy something that looks like Goldman Sachs
Or
right?
LPL?
Or do you try to get cute with something like this, where the trend is still a mess, right?
I think they're two different things. I think
They are.
these are two different trades. And we're
So
talking about these big money center banks relative to these little tiny regional banks. I had a great conversation with Rick Rule yesterday, legend in the natural resource space. That video will be dropping early next week. Highly encourage you guys to watch that. So I went into the conversation thinking that we were going to talk about gold because he's like a big gold guy. He's like a legend in the gold space. You know what we talked about? We talked about energy and regional banks.
I can't wait to watch it. I used to watch a lot of Rick Rule videos.
Yeah. I didn't realize that he's started half dozen regional banks himself. So he knows a lot about the regional bank space. He knows a lot about natural resources. You know what else I liked about the conversation with Rick Rule is that
like natural resource banks specifically to bank the businesses he was investing in, correct?
Yep. He's like, I can't compete with Bank of America.
No.
But Bank of America in the local regional areas can't compete with me.
Yep.
Yeah. Love that. Also, what I was really impressed with Rick Rule is he was talking about, I can't wait for you guys to listen. He was talking about, he doesn't know anything about tech. He doesn't know anything about cryptocurrencies. He doesn't know anything about, certain parts of the market. So he just stays away from that. He knows where he doesn't have an edge. So he just avoids it altogether.
But
mad respect for that.
Doesn't he have smart friends, like, you know what I mean, that he could just take their advice to gain exposure to some of these trends?
Listen, he's done well for himself. I think he stays in his own lane. Gave us some great history lessons about the growth of the Vancouver exchange and how that came to be because the politics around the Toronto exchange and those types of names. And what ended up happening in Vancouver, it was a small market, not much capital. And then what happened? It started attracting all the Asia money, all the European money. And, what started out as just like a small little regional exchange for speculative natural resource investments and, really a way for these small, tiny little companies to raise capital turned into the monster that it is today. Shout out Vancouver. Love Vancouver. Love the drive up to Whistler. Whistler is awesome. Fun fact, they party in Whistler. Let me tell you. This isn't like some sleepy mountain town. They hit it hard, these Canadians up there, man. Mad respect Mad respect. You get out the lift, like the après ski. These guys are pumping their fists, like out in the. It is something. It is something to see. We got to do a charge summit out in Vancouver and go up to Whistler. Fantastic. Can
Whistler?
Texas do what Vancouver did? I hope so.
What?
I'm rooting for them. Right,
What?
Strazza? Are you rooting for them, or are you a hater on this whole Texas thing?
I'm so excited for the whole Texas thing. Yeah.
You know what else I didn't realize that Rick Rule mentioned is that at the time, Spokane, am I saying that right? Spokane, Washington, or is it Spokane, Washington? I don't know. It's too far. Spokane?
I think it's Can. I think it's Can.
Spokane, Washington, and also Denver were like competing to be that West Coast exchange. Denver was up in as one of the possibilities.
I could see Denver, but it had to be in Texas, I think.
No. The Vancouver situation.
Oh, yeah.
They beat out Spokane and Denver, which I did not know.
Denver. Wow. For
natural, Denver, I can see how Denver there would be like a commodities natural resource exchange. I could see that. Spokane,
What's Spokane?
Exactly. Right.
That's in
it couldn't be further from Key West. Let's just say that.
It's in Washington.
In the continental US, it is the exact opposite corner. Couldn't be further.
Yeah. Strazza, it's where Gonzaga is, if that means anything to you.
Oh, that does. Yeah, thank you.
Strazza's like, ooh, a Jesuit school. Oh, well, in that case.
I know. All right, good. Hey, I found a bank that I like. I want to show it to you guys. I want to see what you think. Play this game like, hey, why does this one look different? Well, this is called New Holdings. You guys heard of the New Bank? It's new. It's also not spelled new. It's spelled new and you. No?
Yeah, we know it.
That's a Brazilian bank.
58 billion, some insane growth. Things about Brazil, right?
Yeah, fintech,
huh?
I've been talking about this name forever, and it just won't break out. But as soon as this thing gets above 12.5, you flip the book.
Flip the book?
Flip the book.
From what?
Flip the book long.
Why you wouldn't be short that?
Nobody's saying to short it. Flip the book is
book
Wall Street talk.
Yeah.
Flip the book is Wall Street talk for take whatever you own, get rid of that, and put it all in the stock.
It means going long to short, my friend.
It means being irresponsibly aggressively long, which I don't quite mean literally flip the book. It's just a saying, Strazza.
I like it too. All right.
Come on, Strazza.
I'm trying to find some good regional banks. That one has been kind of on our radar for a long time now. People seem to like it a little bit too much.
Regional bank is a strong word for this thing.
It's a bank.
Strong word.
It's a bank.
I think it does a lot of things. And it's in Brazil, so they may or may not be doing some shady things. I don't know.
No.
I hope they are. Right?
No, I mean it's just been insane growth. I don't know.
They're listed as a regional bank, but they got other things going on. They got credit card situations going.
Yeah, a lot.
This is like a mobile payments. This is like if a regional bank and PayPal had a baby in Brazil.
It's a digital banking platform. The reason why the price has done so much better than other regional banks, it's just the region of the world that they're operating in. So yeah, they do offer a full range, a full suite of banking products, but they're just customer growth. 2 years ago, they had less than 60 million customers. They have over 100 million today. So they've really blown up just being in markets like Brazil, Mexico, and Colombia, and offering a wide range of services and doing it all online. So seems to be working, but they are surely a bank making money off NIM just like everybody else.
I like this ICICI Bank also.
I'm staying away from India right now.
I don't know what your beef is with India. Pun intended. Haha. See what I did there? I'm not that clever. It was definitely not intended. But check out ICICI Bank, slide 2, Spencer. Talking about it in the chat. Chris Brown talking about it in the chat. So this is IBN making new all-time highs. ICICI Bank. We're talking about what's your beef with India?
There's just been a huge. It's the most crowded trade on Wall Street right now because of China. Yeah, it's true. Ask your RIA friends. It happened.
Yeah. You don't think it's Taiwan?
No. People just pour it into India and pour it out of China. Any EM managers.
Dude, they've been pouring into India for a long time, man.
Yeah,
You should go to India.
2 or 3 years.
Why don't you go to India? Just go.
Maybe one day.
You should go to India. It is amazing food, amazing people, great party, beautiful women, by the way. Feels like you're in Miami when you're in Mumbai. It's hot, it's sweaty. People look like they're from Miami. You know, there was a big migration over from the Iberian Peninsula back in the day into India. India's a huge country. India's like 20 different countries. But what ends up happening is that, you know, the Indian food is only spicy because of the Mexican trade, right? So the Portuguese were bringing the peppers in from Mexico, and then they were trading with India. So what ended up happening is you have all these people from the Iberian Peninsula moving to India. That's why you have people in India with like Spanish and like Romance language last names like Rodriguez, and they look like they're from Miami because they came from the same peninsula. They just went to India instead of Miami.
How do you know all this?
Well, I've been to India a whole bunch, and I partied in India quite a bit, and I've looked around and been like, it feels like we're in Miami. Like, you know, like the music sounds like we're in Miami. The people look like they're from Miami. Nobody has any clothes on. It's fantastic.
Well, right. I'll be in the United States version of India this weekend if anybody wants to hang him up.
The United States version of India.
Miami.
Oh, in Miami. You should go to Arbetters and order the JC dog.
I still have never gone because
go.
I don't hang out in those neighborhoods when I go to Miami.
If you say I love Bob Cousy or I love Larry Bird, you get a free refill.
Is that true still?
It better be.
Celtics,
yeah. Huh? They were Celtics fans. They were from Boston. The original owners. Yeah. Sean's saying none of this is true. That's such bullshit. I partied with Sean. I partied with Sean in India. Sean loves India, and they love him.
All right, wait. I do want to bring on our guest here.
All right, do it.
There's that Seinfeld episode where they go to India for the wedding, and the episode is played backwards. It's played in reverse chronological order. And the very beginning of the episode is George gets a letter in the mail. The invitation to the wedding, he goes, like I'm going to India. That's how I feel, right? Like I'm going to India, right? Anyway, moving on. Okay. Let's bring on David.
I love India, and don't go to Sexy Fish. The food is terrible. The bathroom's cool.
All right.
It's a vibe. It's a vibe. Go once.
Vibe.
Dave Nicoski, Vermilion Research. Bring him on.
Do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David, what's happening?
Hey, can you guys hear me?
We hear you loud and clear.
All right. Is my picture available? I had to change shirts just because you guys got the video going. And I'm like, I'm not going to go with a sweatshirt on. So,
please, David, please.
Yeah.
I'm wearing a Jersey Diners t-shirt.
All right. I had to throw the Patagonia on, so it looks like I'm on Wall Street. Right.
No, I love it. Listen, David, I appreciate you being here. This is not a Twitter Spaces. So the cameras are on.
Good.
I know you like your Twitter Spaces. You do a nice job on there. Before we get into it, why don't you tell the folks a little bit about your day job? You know, why you find yourself on Twitter Spaces quite a bit, what value you get from that. I'd love to hear it myself.
Yeah, you know, I mean, my clients are all institutional. I do technical research. Been doing it for 38 years. Was at a large brokerage firm for many years. Left in 2005. Started my own business. absolutely love what I do. I was taught by my father, who worked with Steve Luthold in the early 70s at Piper. So that's kind of my background. In high school, I was marking up charts by, mechanical pencil. We didn't have, charting at all. I had to, at one point, I switched this to a CAD CAM device. It took, we had at that time like 240 charts. I think it took like 12 hours to print them out on a CAD CAM device. Right. And I mean, you talk about like where technology has come for our industry to,
Mechanical
get guys.
pencils were the technology of the day.
Yes. So, we produced our own group charts, and did all the, calculations using a mainframe computer at Piper. So, talk about like where I'd have to take a PC, connect to the mainframe. I used to pick up a tape from IDC that was magnetic, right? It would look like a movie theater tape, right? And go right to the post office, pick it up, run it to our mainframe room. And that updated all of the clients' accounts too, and then we derived the information and the pricing off of it. So, it's like an amazingly different world from where I started and where I'm at now. So
can you explain to me what's in the water in Minneapolis, Minnesota? Yourself, Craig Johnson, you've got Gene Munster, you got Ralph Acampora.
Yeah, well, Ralph
going on
is
up
a
there?
new addition relative to us, though, but he's certainly had his share of technical analysis throughout history. So,
Yeah, Ralph is newcomer to the area.
Yep,
He's from New York, yes.
yeah,
But he's there now.
he is. He's got the. I wonder if he's going to have to add on to the barn with his Dow chart.
The way this market's going, he's going to need a new barn,
right? Exactly.
He's going to need a second story on top,
Exactly. It's going to be a high rise soon.
That's right. The top of the barn doesn't mean there's resistance there. You know what I'm saying, David?
Yeah. I hear you.
So serious question though. What the hell's in the water up there? Why are, such studs coming out of Minneapolis or going to Minneapolis?
I mean, most people don't realize this. Minneapolis is small and Minnesota, as small as we are, prior to 1999, there was more Fortune 500 companies in Minnesota than any other state. Think about that. Like you would never, and of course you got the technology boom, and that, moved everything to California, and even California is starting to wind down in terms of the number of companies that are on the Fortune 500 list. But, you look at Minneapolis, you had, Target started from here, United Healthcare, you had St. Jude, you had Target Therapeutics, you had a number of, it's healthcare alley up here. General Mills, you had 3M, you had Honeywell was at one time stationed here. So, it's a lot of big companies in Minneapolis, and there's still a lot, but, it's certainly receding since the, the boom and the tech craze of the 99, 2000 period. So.
No, this is fascinating. Great color. I've always kind of wondered what the hell's going on up there, right? I've only been in Minneapolis once. I had lunch with Craig Johnson and left. I wasn't there for very long. I got to make it back up there in the summertime.
It's beautiful here in the summer. Absolutely gorgeous.
Not so much in January.
No, stay out. We keep the riffraff out. You stay where you are. All right.
All right. Fair enough. Fair enough. All right, David, let's talk markets. Here we are, new all-time highs, S&P 500, NASDAQ, Russell 3000. Everything's great, up forever?
Well, there's a lot of divergences, in terms of breadth. I mean, we all see it as technicians. What's important is just to know that breadth is narrowing. It doesn't mean the market can't go higher, right? Some of your strongest moves are when there's narrow breadth. Look at 99, 2000. No one wanted to touch a staple stock. No one wanted a utility. So that's not going to go on forever. I think yesterday's market activity, might start a turning point. And the question and the jury's still out whether or not you actually see some of those money flows, if it does come out of tech and the tech weighting, if it rotates into, the value portion, or the oversold areas of the market. And that's, again, that's a 2 to 3 day event. It's not a 1 day. You can call it and see it. I did see, looking at all of our short calls that we've had and seeing a lot of those names were up yesterday. I mean, across the board, whether it was, and they look like horrible charts, right? Like they haven't changed the chart structure. They're still in downtrends, but you had some, at least upticks in them on a day where the tech was, down quite hard. A couple days ago, if you were looking at candlestick charts, you saw a lot of hammer prep, patterns in the energy arena. Again, I don't want to make one call off of one pattern, but those are things to pay attention to see where they, what they develop into over the course of the next several days. So I'm a believer that I think tech is over-owned. And, we've been putting out, yesterday, I put a piece out and discussed it in the morning space with David Towell, which I do a lot of Mario's spaces in, about the concentration risk out there. If you get, and here's the problem, if Apple and, Nvidia corrected 5%, like it's not a big correction, but if you rolled that money over into other areas of the market, you're talking about significant gains. In October, third week of October of last year, I discussed at length about, the Russell 1000 contains 95% of the market cap. The Russell 2000's 5%. If you just had 1% go into that, you get a 20 to 25% rally. That's exactly what you saw. And my thought is probably no different, except I don't have the same divergences in terms of the breadth in the Russell 2000, such as, percent above 50-day or 200-day. And you clearly saw those in the Russell 2000 back in, third week of October of last year. So, if I saw something like that, I would imagine that we could get a big lift off of, some of the smaller cap names. But again, the jury's still out. I saw incremental yesterday. I didn't see, see it across the board. What's interesting is, gold is outperforming Bitcoin right now.
Over what time frame?
For the last 3 months. So you are starting to see some inflections. Alcoa and Century Aluminum, pulled back to supports, bouncing here. So again, as small as, I don't know if you read that Walter Deemer piece that he wrote in March of 2000. If you haven't, I go look in his profile on X and read that piece. And it was about the how when you look at this market, and it has some some similarities to 2000, but not quite the same, right? These are highly profitable companies. I want to say that I think it looks more like what we saw in the 70s, because we do have a nifty 50 type of environment, right? Costco is certainly not a tech company. Wingstop's not a tech company. Texas Roadhouse is not. So as you go through and see these names where they have expensive valuations, and you and I are technical analysts, but we certainly have to appreciate how do you encapsulate in one word what this market looks like? And I think the best approach is to look at that Nifty 50, which was actually a Nifty 60 in the 70s, and it was across a spectrum of sectors. It wasn't just one sector. Okay, and so when you look at that same period, the one thing that I would say that you take away is, those names that were on the list were, Procter and Gamble, General Mills, Eastman, Kodak, Polaroid, Xerox, Avon, and even Walmart was on that list. When you look at the performance over the next, 7-8 years, those stocks underperformed, but they were great growth, right? They were still strong growth, but they underperformed the market. He alluded to U.S. Steel, for instance, was trading at a PE of 5. We have that in a lot of areas right now where you have like Vale. I'm not a big fan of Brazil right now, but Vale is trading at like 6 times earnings. Are we not going to use steel anymore? Do these chips go into a steel cabinet? Do they go into your washing machine, your car? Yeah. So there's a huge delineation and bifurcation of, I think this push to growth. And again, it's not bad. It's only bad at the turning point, right? Like you stick with leadership until it changes.
Let me ask you something, David. You're talking a lot about natural resources. You brought up gold. You're talking about other base metals. Minnesota's close to Canada. The accents are also very similar.
Yeah.
Is there a Canadian natural resource beast inside of you, which is why you're saying such things, or
No.
do you think are you thinking clearly, right? Like,
Yeah.
I'm kind of just messing around with you, but like seriously though, like have you always been a natural resource guy, or is there a time and a place?
No, I'm not. You know what? If you like gold, people think that like you're this big gold bug. I'm a gold bug when you need to be. You know what I mean? Like I don't have a problem saying sell gold. I don't have a problem saying sell materials. Do I like materials right here? No, I don't. But I'm just, observe the tape action. Like we became positive on aluminum stocks, 4 months ago. I mean, look at the run up in Alcoa. Look at the run up in Century Aluminum. So I'm not anything bug. I like to follow trends. Period.
Yeah, me too. Obviously, we've liked gold. It's been working. That's why we liked gold. But I remember and I get the same thing. Oh, gold bug, all this and that. In 2013, I spoke at a gold conference in Vancouver, and I told 1,000 gold bugs that gold was going a lot lower, sell it all. And they took it pretty well, actually.
Yeah.
They bought me drinks after and everything. I thought they were gonna clobber me over the head or something.
Right.
They took it well. I was actually pretty impressed. But yeah, I think there's a time and a place. So kudos on you.
Yeah, so and that's like that when you go in the spaces with some of the Canadian oil mafia, right?
Yeah.
I became bearish in October of 22 of oil, and we lowered our weightings on it, and the market bottomed, and I came into some of the rooms and just got toasted by some of these guys, and it was the right call. Relative strength was peaking, and the market was bottoming. Do you want to own oil, or do you want to own the market bottoming? So, and I love all those guys, right? Like I chat with them regularly, but there's a time where you're going to say the wrong thing and upset a lot of people, and
in this
you
business,
just have to go with the flow.
You make your rounds to all the sectors. You'll hate them all eventually. You'll like them all eventually, right? So you're going to piss somebody off along the way always.
Oh, we always do as technicians, don't we?
Yeah.
I mean, you can't love something forever, right? Especially when it doesn't know that you actually love it, right? Stock doesn't know you own it.
That's right.
Trust me.
It's my Amazon, but my Amazon, my Nvidia, right? Yeah. It's not your anything.
Yeah.
All right, let's continue with this rotation. Consumer discretionary, really has been a huge disappointment for quite some time now. If this is a bull market and sector rotation continues to come in as it has consistently for 2 years now, wouldn't now be a good time for these discretionary stocks to start to do well? Amazon's getting close to all-time highs. Saw some rotation into Home Depot making new multi-month highs this week. You think discretionary's got a shot, or is the weakness in discretionary more telling than anything else?
I think that if you, in my view, I've done a lot of spaces on X, and had every person opposed to me, every person that understood. I've been in the camp for the last 2 years. If your definition of the consumer is strong, is that boats aren't selling, RVs aren't selling, side-by-sides aren't selling, snowmobiles aren't selling, then your definition and my definition are two different things. Now, if your definition of the consumer is strong is that Costco and Walmart are going up and Abercrombie and Fitch is going up, I haven't seen any naked starving people outside my window. Okay. If you went back to, your psychology class and looked at Maslow's hierarchy of needs, right? Like, what do you need? Food, water, clothing, a roof above your head. That's the principal foundation of that whole, and it's only when you achieve that can you move up to another level, right? And that includes buying an RV, buying a snowmobile. So buying furniture, look at restoration hardware. I mean, Lazy Boy had some great numbers, but to sit there and say the consumer is strong because they're going to Costco. It's not the consumer is strong. The consumer is trying to get more buying power. Okay. It's like looking at the restaurants. Wingstop hitting new highs. That's great. I can point to 5 other restaurants that are hitting new lows.
Denny's.
So, the definition of the consumer strong is when you have the majority in a particular group going up. So is the consumer strong? Yep. They're still wearing clothes and they're eating food. That's what I'll tell you. If I look at the home builders right now and look at a lot of the suppliers, American Woodmark, largest supplier of cabinetry and vanities for the housing market. I mean, I see a top. Look at HEES and HRI, which are the rental companies that provide lifts and everything that goes into what a home builder needs to, rent equipment to lift shingles on the roof. Like those have gotten decimated. URI is holding up, but it's, is that a top? Well, we'll see if it takes out, its support level. So, ITB and XHB, is that something you want to buy right now, or do you want to wait for the reversal? Because they look like tops to me, so.
David, what about the dispersion? You've alluded to it, but man, I feel like it's really standing out. The dispersion within consumer discretionary, the winners and the losers, like very extreme.
And that's why, like I say, it's more like the Nifty 50 area where you buy the names that, everyone thinks is just going to grow forever. If the consumer starts to get stronger, right, and realize there's attrition in the industry, right? Like you're going to have a lot of, Dollar Tree, Dollar General stores close, right? It's actually pushing more people into Costco and Walmart because they don't have a choice. If someone closes, that's 5 miles from them that they went to, and they have to drive 20 miles to get to a Walmart, right? So, in periods like this, the market gravitates towards the names that are going to stay in business and actually attract more people. If the market does bottom, someone's going to be like, why do I want to own Costco at 45 times, right? Like at some point, you're going to have to go, shit, this thing could go sideways for 10 years, still grow and get to a valuation that is commensurate with their growth, right? Because they're not growing at 40% growth. So that's why I think, looking back at the 70s period, in my mind, makes a lot more sense than looking at the 99-2000 period. But I think that, history would say that when a sector gets over 30% of the weighting of the market, it never held it for very long, right? Energy was 30% of the market in 1980. Where are we today? 4%.
Less.
Right? It's like 3.7 or something. I mean, we're talking about AI and no one exists that's in your chat room without energy. I can guarantee you that.
Energy is 3.8% now.
Yeah. Yeah.
And it was 30. It's 10 times that. I mean, and it's 2% of the Dow and it's 0% of the NASDAQ. How do you think about that weighting? When you think about, investors' portfolios and just saying lack of natural resource exposure is almost like criminal because it's so below lacking, right? I mean, it is just non-existent exposure to natural resources.
And that's how, turning points happen. And again, I'm not saying the turning points today, it's tomorrow, but it's something to be aware of, if you're 100% in tech and 100% into NVIDIA, all you need is one order cancellation.
Yeah, but David, can't you argue that turn happened 4 years ago when energy was 2% of the S&P 500, crude oil was trading below zero?
Yeah. No, absolutely. Yeah.
How was that first leg higher? We've seen some digestion. Now maybe that trend continues.
Well, I think you have, averages are never something to look at, right? Like if you said, hey, over the last 40 years, energy, has maintained an average of, let's say, 6%, right? Like, I don't care if the average is 6. I care when it goes from 2% to 4%. I care when it goes from 4% to 5%. I care when it goes from 5 to 4. I care when it goes from 4 to 2. Right? It's the change. It's a second derivative, right? So, I'm just, in the off chance that you can educate viewers and say, hey, this is the average, we're well below it, but now is not the time, we're going to wait for that inflection, right? Just off the charts, like the charts tell us everything, right? But be aware of what history would provide, because history has never been wrong either, right? Like we have recorded, we'll call it the blockchain of the market, right? Like we can look back and go, okay, technology and media communications now are what, 50% of the market.
Yeah.
Like
that got so big that they had to get tech stocks out of there and invent new sectors to put them in.
Well, take the Dow. It's called the Dow Industrials.
Yeah.
Is it still the Dow Industrials?
Well, even transports. Look at the Dow transports. They kicked out JetBlue and added Uber.
Yeah.
You know what I mean? And I have a funny feeling that the transports are going to be adding more technology. You talk about the Dow Industrials. They kicked out ExxonMobil to add more tech in Salesforce.
Yeah, CRM right. So, in people in these institutions, we think they're like, super smart, right? Like it's five guys in a back room going, you know what? We're the Dow Industrials, and NASDAQ and S&P are getting all the attention. Let's move this company out, throw Apple in it. Let's throw this company out. Let's add CRM, right? Like we're moving away from it's kind of like, populism, right? Like if churches serve beer, imagine how many people would attend church nowadays, right? I mean, you know what I'm saying? Like,
yeah,
this is where we're at, and it's important to at least understand when you're looking at an index what the makeup of it is.
And I feel like a lot of investors just don't do that. They're not aware of that. By the way, Dow Jones Industrial Average currently 18% technology. It's not the largest. Financials leading the way. 23.5% is the largest component. Healthcare also right there at 18.25%. Consumer discretionary up there, and then there's not much of anything else. No materials, no utilities, no communications, no energy. It's really just technology, industrials, healthcare, financials, and discretionary. That's your Dow Jones Industrial Average.
Yeah. So it's been hijacked. We'll say it's been hijacked.
They're going to take out Nvidia. Sorry, they're going to take out Intel and Cisco. They're going to add Nvidia and Broadcom. They're going to take out Verizon and add Google.
But it could happen. You know what's funny is, when did they add Apple?
10 years ago?
Oh, not even close.
Not even close?
Not even close.
Yeah, it was 10 years ago. It was March of 2015, almost 10 years ago.
And do you know what the run-up of Apple was prior to that?
Was it pretty humongous?
Well, it was certainly, pretty damn stellar.
Yeah, I mean, it was a monster run off of the April 2013 lows. Yeah, I mean, they top ticked Apple, that's for sure. Apple had a 30% correction after it was added to the Dow, and then it went on from there.
Look at the relative performance that it had from 05 to 015. You're talking about 1780%. So you never know if they're going to add things closer to the top, like CRM and ExxonMobil. Look at the relative strength divergence right there.
That's exactly right. You look at the performance of Exxon and CRM and energy and tech since then. I mean, it's just been, they couldn't have chosen a worse time to do that. Final trade, David, what do you like out there? What are you buying before the weekend gets here?
Geez, these are tough questions, man. Tough crowd.
Yeah, what do you think? What do you think this is? You think this is basic cable? Hell no, this is the morning show.
Right?
We're not messing around.
We need names. I like the aluminum stocks. Again, I'm playing probably more defensive here, not knowing. I mentioned, for instance, the SOX S index yesterday traded 72 million shares, highest volume in a triple short semi stocks. The high in March, which I said was a top, not the top, that traded, I want to say, like 42 million shares. So almost double at this turn from the March peak. So
a lot of money flowing into the triple short semis ETF. Is that what you're saying?
I'm saying that you had the highest volume by far, by like almost twice as much as March. Yesterday. So
into the triple leverage short semis ETF.
Yep.
And what does that volume suggest to you think?
Well, it would suggest that there's some defensive positioning taking place. March was a pretty, from that pullback from that March high in semis, it wasn't like a huge pullback, but it was a corrective action, right? So I'm probably more defensive right now, looking for opportunity and waiting to see what the market tells me. I think I do like.
You think natural resources are defensive?
I think they're going to. Well, put it this way: if you had a 10% correction in tech, and just a little bit of that money found its way across the sector spectrum, right? I think energy is probably going to do better than tech during that corrective action.
All right.
I would agree with that.
Couldn't you also, just regards to NVIDIA though, aren't there also the levered and inverse plays on NVIDIA itself, like NVDL and the other one? I don't know what the volume was there yesterday, but
I didn't. You know what's funny is NVIDIA did not have a huge volume day yesterday.
I was going to mention that as well.
Right. which is strange because up until March I had been in the camp that the analog chip guys were extremely weak, right? Like if you looked at analog devices, Texas Instruments, Microchip, STM, they produce everything that goes into your TV, your washer, dryer, appliances, cars, right? Like those are all the commodity related names. So, look at it, go pull up ADI or Texas Instruments and look at your relative strength against the S&P or the stocks. Like most of them were hitting multi-year relative strength lows. Like we're talking 5-year relative strength lows. And then you got that rip in March as you saw some money gradually move out of some of the AI related names during that corrective action. Now pull up a chart of Microchip and look at that resistance that it broke through, and it failed miserably. Like Microchip has taken out, that major support level. And so I see the economy slowing, and I think it's slowing internally much more than what we are seeing by economic numbers.
Perhaps, maybe just some chips are better than others, right? But
if you look across the spectrum, AI has been leading. I mean, there's no ifs, ands, or buts. But AI doesn't go into your washing machine yet, right? Doesn't go into your TV yet.
Yeah.
These are everyday things that you and I would go out and buy. Like, how many GPUs did you buy from NVIDIA? I want to know.
Me?
Yeah.
Did you just buy some?
Exactly. That's my point.
No, he did. He actually did.
No. NVIDIA is too top shelf for me, JC. I'm not going.
Oh, I don't know the difference. I didn't realize that was a top shelf item.
It's too top shelf for me. Yeah.
It's like a first growth.
No, zero. The answer is zero, David.
Okay.
All right. So, I'm looking for the consumer side. Consumer 70% of the economy. Yeah. I like the AI thought, but I'm going to say I think it's probably much like the internet when you had the Cisco, Sun Microsystems, JDSUs of the world. The internet really came to fruition after the bubble, right? Like, every company created a website. It took years to develop. And I'm in that camp with AI. I think it's important, but it's not going to hit. It's hitting us now. I mean, last night, my girlfriend and I went to a restaurant and she looked up Norway Ridge on Meta and just wanted to see if they had a special or any special dishes that last night. And as soon as she backed out of it, she got a message from Meta AI saying Norway Ridge, it's close to the Canadian border. And I'm like, we're 4 hours away from the Canadian. Like, I'm not driving 4 hours to eat. Okay. Like, it's actually right near where we live. Right. But that's great. But you know what? I was still only going to have dinner once last night. And I already knew the restaurants in the area. So I don't know that AI is going to help anyone in that circumstance. I don't know. I could spend it at this restaurant or that one.
You think AI is more like the internet, and it's going to take time, like you said, after the fact, and not like 3D printing? Where it just
I think
disappeared.
it's going to take time. Yeah, and garbage in, garbage out. I'm not. If I checked into a restaurant and it told me it's right next to the Canadian border and I'm 4 hours away, I'm not driving up there for dinner and then coming home and spending 8 hours on the road.
So NVIDIA,
garbage in, garbage out.
NVIDIA is Cisco. Got it. All right.
All right.
No, I love it, David. Thank you. Thank you for being here. I will see you on a Twitter Space.
I'd love
soon.
to see you, buddy. All right.
Promise.
All right.
Thanks a lot,
man.
Okay.
Adios.
Guys, the link to David's Twitter and site are in the description.
Dude, Minneapolis.
Yeah.
I mean, a hub of intelligence. Who knew? Who knew?
Do you think we're too skeptical sometimes, JC?
About what?
I was thinking the same thing. It was a great interview, but I was sitting here thinking the same thing. And I'm glad that you asked the question, not me. But another Canadian technician who loves gold and doesn't trust AI.
He's not
He's
Canadian.
not Canadian.
He talks like a Canadian. He's close. Canadian. He sounds Canadian. He looks Canadian. He talked about snowmobiles and side-by-sides. Very Canadian.
No, that's
but he's actually Minneapolis.
So it's not Canada?
It's not Canada. Right? You know what I mean?
Yeah, it's not. It's not, but it's not. Yeah, that makes sense.
Talk to Craig Johnson. He sounds Canadian. He acts Canadian, So Minnesota, mini Canada, It's like Buffalo. You know how Sean thinks he's Canadian? He drinks
Sean's
like Canadian beers.
He's Canadian.
He thinks he's Canadian. Because Buffalo is like almost there, eh?
Well, not that there's anything wrong with that.
No, there's not. I love Canada. Yeah. No, not hating on Canada at all. Quite the opposite. I love Canada. I might be going to Montreal next month, actually. Speaking of Canada.
Yeah. Maybe one of these days we could just list out all of the United States Canadian cities, but there are a lot of them, and Sean's lived in 2. So
the United States Canadian cities. There's got to be some of them in Michigan, right? Spencer?
Well, yeah, in the UP for sure. The funny thing about Detroit is in Detroit you go
not
south.
Canadian.
Well, no, but Detroit you go south to go to Canada. You don't go north, you go south. But
technically,
I don't understand.
All right. Anyway,
that's north of Fort Lauderdale, Strazza.
Way too far for me.
It's so far.
All right. It is 9:39. We'll have Fonz hop in a few. How are things looking out there? I'm looking at
it's a big nothing burger out there, Spencer.
What?
You're not
it can't
much.
be. That can't be. It's options expiration. It's a triple wishing.
I don't know how many witches there are today. I believe there are 3, maybe 4. I don't know. Lots of witches. Dow futures are literally 0.0.
Yeah, it's early yet.
Lutarski. Do we have it?
No, I'm in Baltimore. We don't have it.
S&P futures down 25 bips. NASDAQ futures down less than 20 bips. Bond futures are up a little bit. I mean, there's just nothing going on. Copper and silver getting the crap kicked out of it today, though. Copper down 2.5%. Silver down 2.5% with a flat gold market. Dollar strong like bull. The dollar. How do we feel about that United States dollar?
I'm okay with it.
You're in favor of it?
Market doesn't seem to care.
I think the market does care. You don't think that's why silver and copper are getting hit because the dollar's ripping?
Oh, that market. I'm not sure about those guys. No, I was talking about the stock market.
No, we talked about this. I think the stock market likes the lack of volatility in bonds and currencies.
I think it likes
the fact that they've been range bound.
I think it likes the lack of direction even more.
Yes. Well, that's what I mean. What I mean.
So, Spencer, can we talk about this doomsday note from Mones Crespi Hart?
Now, there's a firm I haven't heard in a minute.
I know. I didn't know that they were still.
Is he saying that right? I don't think I've ever heard of these.
Wow,
people.
I haven't heard that name in 4 years maybe. Okay, yeah.
I'd just like to say, Spencer, you don't look like you're a serial killer now. Actually, so
it's because of the.
Wow, you fixed yourself. Good job.
Yeah, I turned the light on.
That whole Baltimore serial killer thing that you had going on at the beginning was creepy, bro.
There's a light right there.
I know. You look much better. You look much healthier.
Also, the sun is higher in the sky, right? So
less creepy for sure.
Guys, what do you think at this point? I mean, Spencer, you probably looked at more of these things even than JC and I over the years, because I think we've gotten really good at ignoring them. But when
I like how he prefaces that.
Yeah, because
in other words, you look at shit that you should not be looking at.
Mona's crispy heart. I haven't thought about those. I forgot they existed, honestly.
So I'm thinking today, when a sell side note starts with just a hyperbolic statement, do you even keep reading?
What is the hyperbolic statement?
Let me give you an example. You've seen these in the wild. A nuclear winter engulfs the software complex. Palantir downgraded.
No, those are actually my favorite ones to read, Steve.
Wow. Wow. Nuclear winter. Okay.
Look, here sell-side analysts do not get enough credit for their creativity. They're not creative all that often, but when they are, it's quite creative.
Do you guys think they have copywriters by now? They must.
It's got to be depressing being a sell-side analyst, isn't it? You don't think? Knowing that nobody cares what you think. Every day you have to go to work knowing that nobody gives a damn. Well, and you can't even like talk about the important stuff. Like if company's not doing any investment banking business, you have to ignore these companies. Like,
well, the worst part is you have to not invest in some of these companies to try to maintain, objectivity and appearance. Or independence and appearance, which sucks even more, in my opinion. And it's really kind of sad. I was talking to somebody literally yesterday afternoon about this, JC. It wasn't like this when you began your career. Some of these shops were very well respected still. They put out good research. Everyone wanted, their notes at times, and it has just changed so much.
Merrill Lynch had 26 technical analysts. Now they have 2.
Yeah.
Suppmeyer and Sienna.
I know. So it's really just...
Which are both great, by the way. Love Suppmeyer and Paul Sienna.
The financial industry landscape has changed a lot, and there have been new regulations along the way, and soft dollar, hard dollar data stuff, and the things that brokers are and are not allowed to do. And it's really just changed the research landscape and the way that we view these sell side notes. But it wasn't always that way.
No,
Peter,
but you saw the writing on the wall. Also, the laws changed in Europe with MiFID II and all that stuff.
MiFID II was a doozy for these guys.
You saw it all coming. So
yeah,
there was a lot of people who's kind of just stayed and kind of milked that industry for knowing that it was ultimately going to disappear. And some of us went on and do our own thing. Fortunately, that worked out pretty well. But you saw it coming. It wasn't like a secret.
I would put Peter. I would put Hindenburg. They're not in this group. They're not in this category. They're a research firm,
like the Hindenburg Omen.
The short sellers.
No, they're a short shop. Hindenburg.
Right. It's not what we're talking about right now.
They're even worse than what we're talking about. Hindenburg.
It's just a different category entirely. But anyway, to answer the original points, Dave, I actually always enjoyed the bombastic doomsday notes the most because they're, again, creativity. Points for creativity always, right? So
and to be clear, like I was saying, like a hyperbolic statement from like a respected real sell side shop. Go read the reports that these short shops put out. Go read the Carousel Capital report. If you want hyperbolic statements, they'll tell you all about these snake oil salesmen and everything else.
Yeah.
Also, the sell side kind of like doomed themselves because they were playing their little old trick that they would pull was to complicate their research notes and overcomplicate things on purpose, so the clients would call in to ask questions and they would get the order.
Well,
that's how they get paid to get the order. So, like that scam went on for quite some time. So nobody feels bad for these people
forever, and the internet ruined it for them. And if it wasn't for the internet and basically just us flattening the information world for everybody, they would still be doing it. And that's why I don't feel bad that this happened to them at all, because of that.
Also, the herding. They're more interested in keeping their job than they are in telling the truth, right? Because think about it like this: if you've got 20 research shops that are all bullish on a stock. If you're bearish, you're the only one that's bearish. You better be right? Yeah. You better be right, or you're going to be looking for a job. So if you're one of these sell side analysts, you're like, okay, should I tell the truth here, or should I just be part of the herd? So in case I get it wrong, everybody else got it wrong too, so that I could pay for Martha's, country club membership and little Timmy's private school, And you know what I mean? Like, think about it. That's, the country club membership and the private school and the lifestyle is way more important than telling customers the truth, right? Think about that. So that's part of that.
Hold on. The greatest trick that Wall Street ever pulled was convincing the rest of the world that this shit was too hard for them, right? Like that intentional complexity, and they do it in a number of different ways. They even do it with the financial instruments and vehicles that they sell to people. They don't want you to understand anything. They do it with the broker statements they send you. They don't want you to be able to understand those either. Trust me, I used to have to audit them.
Can we talk about the commitment of traders report? Have you guys looked at that?
Basically, the whole.
I don't understand anything about that.
And it really hurt them.
The last thing I'll say about sell side is these notes. I will say this: they matter between the hours of 4 a.m. and like 9 a.m.
Why?
Okay, they matter for those 5 hours. After that, really not so much. But in the pre-market, I see it every day, and these notes still give juice to stocks in the pre-market. That's all I'm saying.
That headline that I just read. Look at Palantir today.
Okay.
Nuclear winter.
Nuclear winter.
Yeah. All right.
What do you say we bring in bonds? Talk about
Before that, we have I asked him for a chart of Boyd Gaming or Penn, either or. I don't really care at this point. But
are they squeezing it? Are they squeezing it? Is that why?
No. Reuters reported that Boyd had approached Penn for a takeover offer. Penn is quite large. Penn is like $9 billion. So Penn is no small cookie here. So that would be quite a large deal.
Penn is $3 billion.
Oh, I'm sorry, my bad. The combined company.
So put a little juice in the stock yesterday. That makes sense.
Yeah.
This thing. When did they buy Barstool?
They don't know.
27, 18, 19.
Before the pandemic.
19, I think.
February 2023. They bought the remainder of it. I think the first deal was in 21, literally when the stock peaked. Right?
That it is probably 2020 is when they announced it. That's probably what happened. Or in 21, maybe 21.
I don't like the whole day trader stuff, guys.
Okay.
What don't you like about it?
You watch some of that?
No.
See what goes on there?
My favorite. I haven't watched it in years, but my favorite one was like the second one he ever did. I think he sold when he wanted to buy.
Yeah, but he's not
he bought when he wanted to sell. But
it's an act. He's acting. He's not an idiot.
Well, in 2020, I don't know how much of that he was acting.
I don't think he's an idiot.
Genuine confusion.
You know what I do like? He has a green hammer.
Yeah.
I don't think he's clever enough to have done that on purpose. Right?
No, he doesn't know what you're talking about.
Because green hammers are actually potentially really bullish.
No, he doesn't know that. He doesn't know what that is. I
guarantee
you, he does not know what that is.
I think it's hilarious how funny that is, but I don't think he knows how funny that is.
So is it like a trading room? Like, does he charge people to like be in the room and follow his trades?
No, he just talks shit.
It's just for fun. Yeah.
He had a nice parlay on the Celtics and Schaffer. What's his name? The golfer?
Chef.
Speaking of,
he had a parlay, made $1.5 million on that parlay.
Speaking of, you want to hear a crazy parlay, and then we'll bring Fonz on. So one of my buddies sent me this. I saw a parlay for a random NFL tight end. His name was Cole Kmet. Cole Kmet, anytime touchdown back in like October, plus Celtics to win the championship. And this guy freaking hit.
All right, hold on. Speaking of players, Sean. No, I'm sorry, Spencer. You heard about this Browns player who drove a car into a restaurant in Key West like a few nights ago?
I don't.
Were you in the restaurant?
No, Lonnie Phelps. Look it up.
I don't know. I didn't. This one, no.
Defensive end for the Browns or something?
I don't know this. I'll look into it.
It's one of the bars.
I'll look into it. Fonz.
Can we get Fonz in here? Get Fonz in here.
Yeah.
I So while I don't think Portnoy is very knowledgeable
Yeah,
in the stock market, I think his pizza reviews are incredible. Listen to that man's advice on pizza. He'll tell you what the best pizza is, and he knows.
I think Strazza just says that because he likes Portnoy likes the New Haven pizzas.
Oh,
Right.
yeah, spoiler alert, it's not from New York City.
Yeah, that's right. Big Fawn's in the house with someone, man.
how is everything going?
Oh, you know, how's the recovery after California, after Sonoma? You know, you get back, you tell all your friends about wine country.
Yeah, man. Yeah, great experience. And the wine, it was very, very good. So
Fonz,
Fonz texted me the other day. He's got the he was drinking the Rancho Maria, little
Yeah.
Zinfandel.
I already finished mine. Mine's gone.
it was so good. So
there's
good.
nothing better. There's nothing better to go with a brisket or baby back ribs than that Dry Creek Valley Zinfandel. Woo!
Fonz, do you know about New, like the bank? Do you use that?
Spencer, do you?
No.
You're just being racist, Spencer.
No.
He lives in Venezuela. He doesn't live in Brazil, bro.
ask him if he eats tacos too. All right, like
Yeah, what are you doing?
Well, I thought we were talking about South America.
No,
but that's a Brazilian bank, so
it's
Sorry.
all Brazil. If you look at it, I just looked at the.
they speak
revenue
Portuguese
per
there.
country.
First of all,
Dude, it's like 90.
Alfonso does not speak. Do you not speak Portuguese? Do you?
no.
Portuguese is like Mandarin.
So they do a tiny bit of business in Colombia and Mexico, like trying to accelerate growth there, but it's like 95% Brazil right now.
My bad.
They got plenty going on in Brazil. They got a lot of people there, Spencer. I don't know if you heard.
Yeah.
So Fonz, talk to me about the biggest companies. Talk to me about the companies that are moving the market, driving the market higher, obviously, not just in the United States, but around the world. Which are the names in the Hall of Famers that stands out?
Well, I mean,
One from
these
yesterday.
days has been a lot of semiconductors. Of course, Nvidia. We're seeing Microsoft doing well. Taiwan Semiconductors, it's doing really, really good. If you look at the EWT, the Taiwan ETF, it's breaking out of a reversal base, basically, because of Taiwan semis. So, I mean, yeah, semiconductors making new highs, but my question is, when we look at software and other tech-related groups, they are like stuck in some ranges, are not like confirming new highs in semiconductors. So my question I'm asking these days is, when are these group finally catch up, right? So I bring this chart, semiconductors, SMH, IGV, and FDN, overlay over the past 2 years. They look more or less exactly the same. So that's what.
Until recently.
Yeah, exactly.
Fonz, when it comes to the other sectors, you know, energy in particular has stood out where the international names are outperforming, particularly the Canadian ones.
Mhm.
You had a pullback like an Imperial, CNX, you know, pullback. Do you buy these pullbacks here?
Right now, I mean, for me, energy is not like a sector that it's appealing right now. Honestly, I know a lot of these big names. For example, Oxy, ExxonMobil are holding their ranges, their prior cycle highs, for example, similar to Imperial oil. So, I mean, the risk is very well defined. So I think if you want to take a shot at these levels, I think you can. But yeah, not my favorite area right now.
No.
What do you think people are ignoring out there? You know, you got a lot of people talking about a lot of different things. What's being ignored that's showing strength?
Yeah, I think you made an interesting point last week. Pointed out discretionary. If we're going to finally see some outperformance from discretionary, and when I was doing my relative strength rankings earlier this week, I noticed that discretionary overall jumped like four spots in the rank. It's showing some improvements over the past few weeks, but it still has work to do. But definitely, that's an area we might be looking some kind of rotation. So I'm paying attention to those names.
What about Latin America? Latin America, big winner last year. Not everything in Latin America is the same country, Spencer. Israel, they have different countries down there, believe it or not. Different languages too. It's wild. What are you thinking down there? Peru, Chile, base metals, mining.
For me, Argentina, it's the best looking country in Latin America. We have been pounding the table all year about the strength in Argentina. Peru has done well. It has retraced some gains at a logical level. Chile, Brazil, there are stocks in sideways ranges, so it's not a touch for me until they resolve in one direction at the end of the day. So that's what I'm seeing in Latin America. If we want to include Mexico, it resolved lower tapping patterns, so it's sideways for longer. If we go to Europe, they were doing great, and in the last few weeks they have retraced some gains too. Now a lot of countries are challenging prior cycle highs, prior resistance now turning into support. So it's interesting what is happening overseas.
Guys, I think we're talking about the wrong region here.
Can we talk about Asia?
There it is.
How did I know? What do you like about Asia?
I'm gonna show you.
Certainly not India. You should go to India.
Yeah.
Why not? Why not India?
I did my Asia trip. I'm I like it where I am, but maybe one day.
But why not?
India
Why not
is
India?
awesome.
India's crowded.
That's he's not wrong there. It is.
Crowded trade, but see what I did there? All right.
Hey, come on.
Throw
now.
up the AIA.
There's a lot of people in India. That is for damn sure.
I've heard. Throw up the AIA. This is the chart. This is the pattern. These are the largest 50 stocks in Asia. That's it. Asia has arrived. No?
What's the country breakdown here?
And we came across the sweetest .com bubble semiconductor base in Junior Hall of Famers yesterday. What'd you think about that one, Fonz?
I like it.
It's a Taiwan.
By the way, so AIA, fun facts about AIA.
Mostly Japan.
I'm sorry?
Mostly Japan.
There's no Japan in it.
Really?
Yes. So
it's
the opposite.
Japan.
It's the opposite of mostly Japan. There's no Japan. It's actually 1/3 Taiwan, 1/3 China, and then another 23% Korea. So it's basically Taiwan, China, Korea. It's half technology, 19% financials, 13% communications, 13% discretionary, no materials, no industrials, no real estate, no healthcare, no energy. That is your AIA. Just fun fact.
So no Japan and no India?
No Japan, no India. It's all Taiwan, Korea, and China.
Good.
And you're looking at 22% Taiwan Semi, 10% Tencent, 10% Samsung, 5% Alibaba.
You know what that's telling us? The laggards are rising. You take Japan and India out of Asia, you would say there's really not much left. Well, this looks like a textbook primary trend reversal to me.
I mean, it's a bet on speculative tech is really what it probably is. A lot of the speculative growth tech looks like this.
Samsung,
right? A lot of the laggards.
Samsung is speculative tech now. You're gonna go tell that to your refrigerator and your washer dryer.
What is it? A consumer staple?
It's consumer electronics. I don't think it's speculative tech. Anyway,
I'm just saying that chart looks like speculative tech.
We found a Taiwan-based semiconductor company That's not Taiwan Semiconductor. Monster base, 5% dividend yield. Oh, you're just gonna throw it right out there like that? Let's throw up the bigger base. Let's zoom way out. You need it?
I don't have it handy. I have this chart.
I got it. Because JC is such a monthly PPO fan. I know he wants this one.
Give it to me. Give it to me. United Microelectronics.
Yeah, UMC. So $22 billion semiconductor company based in Taiwan. Huge dividend. And we've seen these bases before, especially in companies, foreign tech companies. I don't think this one's any different. We've been talking about like the international tech theme too, whether it's the Dutch Master, ASML, Taiwan Semi, SAP. A lot of these ex-US tech stocks doing really well. We could overlay this with Micron or other semiconductors that broke out of these .com bubble bases. I don't think this one will be any different. And I think that 5% yield is awesome. You're also getting the first bullish crossover in positive range ever. So the way like these momentum cross indicators work is they're simply taking the difference between a short-term moving average and a longer-term moving average, and then they're using like a moving average on top of that calculation as the signal line. So the red line here would be like the 9-period moving average that is tracking the difference between the 26-month and the 12-month moving average. You want the crossover to happen here in the momentum indicator in an environment where the shorter term moving average is actually still above the long-term moving average. That means like you get a corrective wave, but like the structural trend is still good kind of thing. So this is actually the first time that has ever happened in positive range in 25 years of history. No? Interesting to me.
Semiconductors in Taiwan, not Taiwan Semi. Small cousin to Taiwan Semi. I like that, Sam. All right, hit it, Spencer.
Recess.
All right, we're running a little late. We got to hop. I want to give a big shout out to my wife. Happy birthday, Morgan.
Yeah.
She's put up with me for almost over 10 years now. God bless her. What a saint. Should be canonized. I got her a Whoop. You know the Whoop? I got her a Whoop, and I got her a bracelet from David Yerman. See if she uses the Whoop. I'm very interested. It's kind of like research because
what's a Whoop?
You don't know about that. Look it up. It's a Whoop. All the cool kids are using it. You clearly are not one of those. And we're gonna be at the Princeton tonight. In Avalon. If you come find me at the Princeton in Avalon tonight, we'll be there after 9:00 after the kids are in bed. Shots on me. So if you're in the area near Avalon, come say what's up at the Princeton tonight. Let's go.
All right. My recess is, hey, the latest episode of Off the Charts is up. It is on YouTube. It is on your favorite podcast platform. The guys, Strazza and Sean, spoke to Todd Gordon. If you head on over to the YouTube channel or the Spotify or the iTunes or wherever, Off the Charts episode Todd Gordon is up. Check it out. It's great. The guys, as always, crushed it. Yep.
And if you're in Miami this weekend, shots on me. So shoot me a DM. Also, about to go talk to one of our friends.
Dude, if you're in Baltimore, shots on me.
About to go talk to one.
If you are in Venezuela.
About to go talk to one of our friends over at the Wall Street Journal. I don't know if he's at Kiplinger's now, about how individual investors can keep their nerve during a temporary market pullback. Is there a sentiment read on that or no, JC?
Oh, Strazza's going to get quoted in the Wall Street Journal.
Probably not a sentiment read though, right? Wall Street Journal topics?
Not all journalists are contrarian indicators, although most of them might be. There are some that are in the know.
All right.
I really enjoy talking to some of them. So
yes, I do too.
All right, we're out. See you guys on Monday. Have a good weekend, all right?
Adios.
Happy Friday.
I can't take no loss. I don't even know what it